Hi, I'm Steve. I'm sitting with my partner, Nathan. We're tax partners at Zeifmans. Tax is always a changing field. This year has been particularly volatile. Nathan, what kind of changes have you seen?
In my mind, there's been three major changes that's arisen in the last few years. The first is the level of tax audits that are arising from the CRA. Never before have I seen quite as many requests for information as today. I'm sure it has to do with artificial intelligence and just how the CRA is tracking data and coming up with their requests. I've also noticed that besides that, they're much more aggressive in imposing penalties, gross negligence penalties. The second thing I think I've noticed recently is just the level of compliance that has grown and grown and grown in our tax practice. And the third thing I think is just the amount of legislation that keeps on piling up. It's becoming more and more challenging. The change to the capital gains inclusion rates, requirements on tax practitioners to have to notify them of certain planning transactions. If there's any kind of a GAR risk, then you have to notify them of that as well. So the amount of legislation and the whole landscape, in my mind, has changed considerably.
Yeah, these items that Nathan has mentioned are really fiascos. It's really often about just avoiding pitfalls, which will lead to extra tax, penalties, interest, and aggravation in dealing with CRA.
In older times, it was more about, servicing the client. Now it's a careful balancing act between the two. Nonetheless, there still always are opportunities, estate planning, to do something called an estate freeze, where you try to minimize future growth in the hands of a parent and allowing it to grow in the hands of the children to reduce their exposure to tax at death. Thinking about exit strategies when somebody wants to sell a business and multiplying the availability of the capital gains deduction by introducing family members into being shareholders of the company, possibly using family trust to accommodate that. And so, the landscape for tax planning will always be there, but, it is a much more risky and aggressive area than before because of all these legislative changes that have occurred.
Unfortunately, being concerned with these tax issues is no longer just the domain of large corporations, which have always had to deal with these kind of issues, but even smaller businesses today tend to be more global, and even very small corporations or small businesses have to deal with HST on an ongoing basis. HST audits or GST audits have been pervasive because of the changes in the regulations applying to so many small businesses, middle-sized entrepreneurial businesses, without having necessarily in-house resources. They have to deal and comply and plan with respect to all of these new tax rules.
I think on that point, the level of global business is definitely a change in the landscape, and the need to have to collaborate with practitioners in various countries to come up with appropriate structures that minimizes tax on a global basis. I'm definitely seeing more and more of. One of the nice things about what we have is a very strong network called 𝐧𝐸, where it's an international network of accounting firms that rely on each other to, solve client problems. And I've dealt with affiliates in the United States, Germany, the UK over the years. And definitely that's something I think that, as the world is becoming a smaller marketplace, you're going to see more and more of over time.
To a great extent, the success of our firm, Zeifmans, over the years has been because of our focus on tax planning. That's what clients are looking for: tax optimization, tax minimization. We have a dedicated Canadian tax group, dedicated US tax group, HST expertise. So I think the message is that tax is changing. Tax is very important for everyone. It's crucial. We monitor these changes so you don't have to.